information relates to the sale of some warehouse equipment no longer. My pen. Right. The following information relates to the sale of some warehouse equipment no longer needed by the business. Description: tubular platform number 579, date of sale the 15th of August 2016. Affordability: JP Suggest is registered for VAT and has a policy of capitalising expenditure to over £500. Warehouse vehicles are depreciated at 40% on a diminishing balance basis. Warehouse equipment is depreciated over 8 years on a straight line basis, assuming no residual value. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. Complete the extract from the non-current asset register on the next page 4. Okay, I think I can do this. Complete the extract from the non-current asset register. Asset register on the next page for any acquisitions of non-current assets during the year ended. Any disposal of non-current assets during the year ended. Depreciation for the year ended. Not every cell will require an entry. Show your answers to decimal places. Right, I think that that's bank, VAT account, and the non-current assets account. So it is this. This is a forklift truck, so it's a vehicle. Forklift number 375. 596. Acquisition date. 25th of August. 16. And the cost is 5030. Year ended the 31st. Any acquisitions of non-current assets during the year ended 31st of August. So, warehouse vehicles depreciate 40% on a diminishing balance basis. That's depreciation charge is 2012. Oh, 0.00, because it's supposed to be two decimal places. We'll put the little commas in, make it consistent. Carrying amount 5030 minus answer is 3018.00. Okay, so I've done that. Any acquisitions of non-current assets during the year ended 31st of August. Any disposals of non-current assets during the year ended 31st of August 2016. Disposals. So, no depreciation in the year of disposal. So, tubular platform number 579 was sold on the 15th of August. Tubular platform 579, so this one here. Disposal date 15th of the 8th. 16. The selling price was $450. I'm not sure if it's because a bunch of good to that. Yeah, we don't depreciate. I believe this is cash because it is paid in full. I'll put a question. Right, any disposal and then depreciation for the year ended 31st of August. Okay. So we've got vehicles 1620 times 0.4 for 8.00. No, 0.00, which is totally stupid. 162 minus answer is 972.00. And then going on a straight line basis, so it'll be the same amount. And there's no depreciation. Okay, that's that done. You're working in the accounting records of a business of the year ended the 31st of March 2017. That can be ignored. A machine was part exchanged on the 1st of November 2016. The original machine was bought for $6,240. Depreciation is priced at 1/6 of the original cost per year on a straight line basis. A full year's depreciation is applied in the year of acquisition and none in the year of disposal. A part exchange allowance of $2,500 was given. $4,400 was paid for the bank to complete the purchase of the new machine. Make entries relating to the disposal. Complete the disposals account. Update the bank account. On each account shall clearly the balance to be carried down or transferred to the statement of profit or loss as appropriate. Okay. Was purchased on the 1st of November 2016. Working the year ended 31st of March 2016. Actually, bought for 600 on the 10th of October. A full year's depreciation applied in the year of acquisition, and none in the year of disposal. So there's none that year, but we've got 1, 2, 3, 4 years. So we have got 6240 divided by 6 is equal to times 4. 6240 minus the answer is 2080. Right, so the original machine was bought that much. So the new machine was paid for bank to complete the purchase of the new machine. A part exchange allowance of 2,500 was given. 4400 plus 2500 6900. I calculate the cost of the new machine. 6900. As at the 31st of March 2018. A machine was part exchanged on the 1st of November 2016. As at, so that's like 26900 divided by 6. Times 2 is equal to 6900 minus the answer. 600. Right. So we've got that money coming out of the bank as paid. Machinery So machinery non-current asset. Money going out. So disposals account. So let me get this straight. No, I'm not sure I can remember how to do this, but let's give it my best shot. Disposal account will be an expense. But in this instance, we have gained because the value that was the value at the point of exchange. So 2500 minus 2080, 420. So we're gonna have 2500 is going to be in the non-current asset, and then we're gonna have 2080 from the asset account. On each account show clearly the balance to be carried down or transferred to the statement of profit loss as appropriate. So we've got 420 of profit and loss, I think, because I'm pretty sure that's an expense account. And so we have got 8295 minus 1.0 3895 carried forward. Carried down. Okay, so I believe I've done that. That's the new machine. In addition to the cost of the machine, there were extra costs of installation. Right, so wages to employees to install the machine, yes. Installation. Testing the machine, yes. Insurance on the machine, no. So 275 plus 350 is 625. You're working on the accounting records of a business for the year ended 31st of March 2017. In this task, you can ignore that. You have the following information. The balance on the rent receivable account at the beginning of the financial year is 800. There's an accrual for rent received as at the end of the year. Rent receivable. Blah 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 blah. Okay. This is where the terminology trips me up. Okay. The balance on the rent receivable account. So rent receivable, that's money that's coming in. That's a sales account. At the beginning of the financial year is 800. This represents an accrual. Oh, I can't remember. So if it was an account where I was having to pay, if I had already paid, it would be prepayment. Okay, this is rent that's owed that's not yet been paid. that's what it is. On the 31st of March 2017, the rent receivable account shows an adjustment for accrued income. Oh wait, hang on. Let's actually check this. The cash book for the year shows receipts for the rent receivable of 9,500 minus 800. 9,500 minus 800 is equal to 8,700 paid. The rent receivable account has been correctly adjusted for 1,100 rent for the month of March. This received into the bank and entered into the cash book on the 11th of April. So it's £110 owed. Hi, Bruce. Accrued income, yeah. There we go. Calculate the amount receivable for the year ended 31st of March. It's plus 1,100,9,800. Here shows payments for office expenses. Oi, cat. You're not helping me do my exam. I know it's a bad day outside, but you shouldn't be inside annoying me. You're a distraction. I need another page. Right, payments for office expenses. So we got 10, 9x5 office expenses paid. Can you just move your feet off the page, please? Thank you. Right, update the office expenses account for this, showing clearly the balance to be carried down. Oh, I've been doing these all wrong. Where do I remember? Gosh, I'm forgetting how to do my accounts. Yeah, because what I want to have is 965, 10, 965, 965 minus 524, 5. Balance being carried down. You now find that there is an unpaid electricity bill for 870. The bill covers the 3 months ended 30th of April 2017 and has not been included in the accounting records. The electricity bill is to be classified under the office expenses. Taking into account this information, complete the following statement by crossing out the incorrect words or by entering the correct figure. Right. We'll check what this is. Alright, so we've got 870 divided by 3 times 2, so we've got 580 owed, accrued. Taking into account this information, complete the following statement. Right, the amount to be transferred to different profit and loss for office expenses will be £580 greater. Office expenses will show as a debit. You're working on the accounting records of a business for the year ended. How am I doing? I'm half an hour in and I have done half of the tasks. This is hard. Okay. You're working on the accounting records of a business for the year ended the 31st of March. You have 5 extracts from the ledger accounts. Bruce Gap. I was reading that. Look at the little boys. Look at the little boys. Little black beans. Little black beans. I am trying to do my work. Right, CP. Pussycat. I need this page. I know you're just terribly cute. I know my baby girl. Thank you. You're working on the accounting records of a business for the year ended 31st of March. You have 5 extracts from the ledger accounts as at the 31st of March. No gross payments of expense or income other than those stated. Alright, using all the information given above and the figures given in the table below, enter amounts in the appropriate trial balance columns. For the account shown, do not use zeros in unused column cells. Do not enter any figures as negatives. Extract from the trial balance as at the 31st of March. You're working on the accounting records of a business for the year ended 31st of March. Sales ledger control account. 13,600. Stop it. Press cap. The VAT account is 4950. Rent receivable. Okay, so this is. Oh, we'll come back to them. Allowance for doubtful debts account. Office expenses account. This account has been adjusted for prepaid expenses. So a prepaid expense. So the prepaid expenses is 725. So I'm guessing it's been adjusted, then they've been taken off. 9875. Okay, then up here, which one was it? The rent receivable. Accrued income. So that's the wrong place. Because you already paid for it, so it's an asset. What happens with this account has been adjusted for accrued income. So accrued income. Accrued income. That somebody owes us. They haven't yet paid and they want to stop it. 875. You are such a pest. 500. You're now ready to prepare a reconciliation of the sales ledger. You're not ready to prepare a reconciliation of the sales ledger to the sales ledger control account. The total of the balances in the sales ledger is. The total has been compared with the sales ledger control account. After investigation of following items, a prompt payment discount of £75 has been omitted from one of the customer accounts, but is included in the total shown in the sales ledger control account. MH suggest 520 has been written off in the sales ledger control account, but not in the individual customer account. Again, that's not going to affect it. A contra entry of 250 has been made in the individual customer and supplier account, but not in the main ledger. Yes, this one here. A credit note for 150 has been debited. A credit note for 150 has been debited to the individual customer account. It has been posted correctly in the main ledger. An invoice on one of the customer accounts has been entered as 145 when the actual invoice was for a credit balance of £45 on a customer account has been added up. A credit balance of £45 on our customer account has been added up as if it were a debit balance. So we've got 14326 minus 13620. I got 250 plus 90 plus 9. Account note for 150 has been debited to the individual customer account. I think. I'm not sure. Okay, you're working on the accounting records of a business for the year ended the 31st of March 2017. A trial balance has been drawn up and a suspense account opened with a debit balance of 1,000. You now need to make some corrections and adjustments for the year. Record the journal entries needed in the main ledger to deal with the items below. You should remove any incorrect entries where appropriate. Post the incorrect entries. Not need to give narratives. Do not enter zeros into unused column cells. Make ignore pattern this type. The account of H. Croft needs to be written off. The balance on the account is of 450. Ignore that. Vehicle repairs of 5 to 5 have been posted to the vehicles at cost account. £1,000 cash has been taken from the business bank account. It has come to light that the owner took this as drawings. The bank account has been credited but no other entry has been made. No entries have been made for closing inventory. It has been valued at the sales price of... No entries have been made for closing inventory. It's been valued... Okay, hang on. No entries have been made for closing inventory. It's been valued at the sales price. 400. The sales price of goods is always 10% higher than the cost of those goods. The adjustments have already been correctly entered. Extend the figures into the statement of profit loss and the statement of financial position columns. Do not enter zeros and unused columns. Complete the extended trial balance by entering the label in the place marked star. Appropriate figures. Okay. So sales 1, 2, 4, 0 minus 250. I'm making a mess already. I need to write tiny. 1, 2, 6, 9, 9, 0. Purchases 6, 7, 0, 0, 0 minus 500. Oh, put the wrong one. 6, 6, 5, 0, 0, 1, 2, 7, 2, 40 minus 2, 1, 2, 6, 9, 9, 0. Sales ledger control. Purchase ledger control. Heat and light. Rent and rates 8,000 minus 240. Office stationery. Office wages 35300. Vehicle at cost is over here. Times 2. That's 7200. Suspense. 240 plus 600 is equal to minus 840 is nothing. Allowance for doubtful debts. 500 minus 250. Allowance for doubtful debts adjustment. Closing inventory. Depreciation charge. Right, we've got 126990 plus 250 plus 7800. 13540 66500. That can't be right. 66500 plus 880 plus 790 plus 530 plus 35300 plus 600 plus 3600. Yeah, I didn't think that looked right. Right, so that is 120 minus answer is equal to 1870. A trainee at your workplace sees that the owner of the business has bought a new shredder which costs £75. He bought it with money he took from the business bank account. The trainee says that it should be recorded in the non-current asset register. Choose one of the statements below to show what the best answer should be. Under the concept of consistency we have in the past, record office equipment items as expenses. Materiality, its value is insignificant and so it can be considered an expense rather than a non-current asset. Why would a business keep a sales ledger control account? Because there's legal requirements to summarize the amounts owed by customers. Which the following are business assets? Select all of those apply. The delivery van. Amounts owed by customers. Amounts not yet paid to suppliers. The stock of goods not yet sold. I think that is. Alrighty.